All right, good morning, everybody. Hope everybody's doing well. I'm still a minute early, so we will take our time easing into this educational day. It is the first day of December, guys. Can you believe it? We made it. First day of December. Love it. Good stuff. Um, Guys, my name is Mark Novak. I'm going to work with you extensively today on the educational process, indicator reading. Talking a lot about rules. There's 15 of us in here right now, guys. I'm going to give it just a minute. I want to put an invitation out there to those of you that are new, because I do know that I have new people. And I'm going to put it out there straight from the glossary of common terms found in the tutorial section. Oops, that's not it. There it is. We're going to post this one right in the room. Gary already knows it. He's putting those pictures in there. Guys, post your pictures and questions. Participate in your own education. I know that sounds silly, right? Well, I came here to learn. Well, learning comes through participation. The more you ask, the more input you put into this classroom, the more aha moments you're going to have throughout the day. We start the first hour and really keep it very, very simple. The first hour is focused 100% on my newer people, and this is really your opportunity to ask anything and everything that's on your brain. I love this class because we have people that are brand new to trading. We have people that are just brand new to the software. We have people with extensive trading in their background. Maybe you're looking for something to support what you're doing, looking to add Fibonacci, which is such a powerful tool. Whatever your reason is for being here, maybe you're just looking for consistency. You've been with us for a while and you're just not hitting your goals the way you want to, and it's time to refocus. It's time to be a student again. Then this is your classroom. This is exactly where you need to be, and you're definitely in the right place. Before we do anything, guys, I always go to forexfactory.com. I like to make sure that I'm not trading into news. If you've ever traded into news, you know why. These news releases can make the market act erratically. These news releases can make it unpredictable. It can spike. So just being aware, having that awareness. Today is Thursday, December 1st. We are almost through 2022. Can you believe it? At 8:30 a.m., you can see that we had that high impact news. That's a market mover. That's the one where typically somebody with deeper pockets than you has a reaction. Either they pull their money out of the market or they drop a whole bunch into it. Either way, it can make that market move kind of erratically. It can take away your advantage. Today at 10 a.m., we have ISM Manufacturing PMI. This is a high impact news. This is going to be right around our first break. I have a note written down on a piece of paper. Hey, Mark, don't forget about high impact news at 10 o'clock. Sometimes you can set a timer on your phone. Whatever you need to do, put a sticky note on your monitor. Stay aware of these. And then we go to the education page. You know, it's funny, I always feel a little arrogant when I come to this page because it's like education sets us apart, but I really believe that it does. This is a classroom that is dedicated 100% to getting you where you want to be. This is a classroom that is focused on your education. Absolutely, John C. I'd love to. You're using Capture, not Snagit, yes? Let me pull mine up. And let's get some charts up so that we can do it full. Here's that crude oil chart. So when you're using TechSmith Capture, let me pull it over here. I want to make sure that you can see everything. Tell you what, before I give you that fish, software user guide, the first page. So if you need to go review, all your answers are found. They always are. We have everything that you could possibly think of, either on the software user guide or the tutorial section. So that's a good one, but let's run through it, John, because this is probably the most important thing in my opinion. You guys getting pictures into this room is going to be the fastest route to getting to where you want to be. So I'm going to click capture on the big red button. If I hover over just one of my charts, it's only going to take a picture of one of my charts. So what I need to do is I'm going to left click and hold down that mouse, and I'm going to drag it all the way down to the bottom right. A couple really important things that I want you to do. I want you to make sure that your timestamps are in there so that I can line up and make sure that your entries, your exits, your questions, I can line them up on the two charts. Make sure that your prices are in there. Because what happens sometimes is people will show me a picture that don't line up, and I get a little confused. I'm getting up there a little bit. I'm a Centrum Silver kind of guy. So make sure things line up, and then you're going to release that mouse button, and it's going to give you this guy right here. You can take a picture, and that's the one you're going to use, capture an image. So I capture that image, and up comes the image preview. And this is where the magic happens. Gary. This is where everything comes alive. So there's a couple pictures that you guys can post for me. You can post pre-trade pictures as your market, as the trade is setting up. And I love pre-trade pictures because it gives you an opportunity to make sure that your rules are met. Sometimes you take chart reading pictures. This would be a chart reading picture. And you might draw an arrow and say, price has reached resistance, right? So we'll use the call out button. And this is how you're going to annotate your charts. This is how you're going to have a conversation with me. Price reached resistance. No triggers through. This is a term, so no trade. And you might just write that. What is this doing for you every time you annotate? This is reminding you that you're a chart reader. This is reminding you that your rules have to be met. And this is confirmation that in this moment that your rules aren't met. So once you annotate your charts, there's also shapes. You may want to use shapes, arrows, call out. You're going to come down here and you're going to click the upload button. When I click the upload button, it's being uploaded, tells me that it shouldn't take long, and then it gives me this box. And this is my screencast link. I'm going to click copy, and it's going to put that URL onto my clipboard. And then once it's on there, let me do this real quick. I'm going to switch screens real fast. There we go. And that's a little weird, but I'm going to come into the chat box. And since I have this popped out, I have to hit Control V. It's going to put that link in there, and for the infinite amount of screens, once I click enter, now I've shared to the room. Ooh, that's tough on the eyes, isn't it? So John, practice a couple. Take a picture, write a couple things on the chart, and just post it in the room. Call it test. Once I hit close, that goes away. It's ready for another picture. But here's kind of the cool thing, and I don't know if you guys knew this or not. Let me open up a new tab. If I go to my TechSmith account, which you're going to have, here's that picture right there, and it's there for me digitally. I can go through and I have this whole library of every picture that I've uploaded. And guys, I take a lot of pictures. I save about a third of the pictures I take, but I'm already 1, 2, 3, 4, 5, 6. I'm about 15 pictures deep this morning. I haven't saved everything. I have pictures of pre-trade setups. I have pictures of chart reading. I have pictures of things that I'm looking at. I'm recognizing patterns. I'm talking about all the things that are going to make me successful. This is one of the most important things, taking these pictures, posting it in the room. So John C., give me a practice picture in there. And then the next thing is being able to take that picture and save it. Have a study spot, right? That's what the spreadsheet's for. I like this. We're getting outside of the usual rigmarole. So every time I take a picture, I'm going to come to my spreadsheet. And guys, this is in your Nexgen Study Picks folder. If you don't have one of these, get it. If you're not using it, use it. I can tell you that this one changed my life. The first time I went live, I struggled. The second time I went live, I filled up this first tab about 3 times, 3 new tabs. And what it is this is my trade journal. Every time I take a trade, I'm going to put it in here. And everything that I do on Monday, I'm going to study on Tuesday. Every picture I take on Tuesday, I'm going to study on Wednesday. And I'm going to keep this process going. So for example, took a trade today. Let's just say it was this one. I can come in, I can study it, I can look at it, I can see what I did. I can look for the things that made me successful. If there were any challenges, I can come back and go, okay, let's avoid those challenges next time. Bobby, that spreadsheet. Let me find it here real quick. Whoops, I'm on the wrong one. It's going to be here in the tutorial section. Don't worry, I'll give you a link. And then there's that trade tracking sheet. I'm going to follow this link. Here's a link if you need to download it. Bobby T, how long have you been with us? There's a link to the spreadsheet, but if you're brand new, 2 weeks, awesome. So then this is going to be for you. Let me find. Go to your search bar and search Nexgen 90. You probably already have this, and it's going to be in your Nexgen Study Picks. I may have gotten rid of that folder because I've got my own folders, but you can search that or you can follow that link, and if you follow that link, you can just, from this Google document, go File, Download. Download it as Excel or Open Document, either works. I like Excel. When I click on Excel, it puts it in my download bar. And then when I click on that link, it's going to open up an Excel version. And this has all the same stuff that mine has, but to save it, I have to enable editing. And then I can just go File and Save As, and it's on my computer. If you need any help with that, let me know. We can do it. I'm going to come back over to mine because this is my trade journal page. This is my favorite looks page. Every time I take a trade that follows the rules, guys, I put it in this sheet. I come back and I study it. I'm studying the absolute perfect ones. So the picture that we just took for John, that was of a termination condition, right? So I can come to my sheet to the termination conditions, and I can put this link in there. And guys, I'm going to come back and study this. I'm going to study this every day to reinforce the rules, to reinforce the patterns, to make sure that I'm getting to where I want to be. There's also a tab that's your client trade examples. And guys, these go back a while. A lot of these are 3-chart, high probability trend trades. Pretty cool, but we've actually simplified quite a bit. And if you go to my favorite looks, and I've been stealing them from you guys, all of these rules have been met on 2 charts, and that's what we're going to focus on today, this 2-chart high probability trade. So Bobby T, if you need help getting that spreadsheet in, let me know. If you need help taking a picture, let me know. This is exactly what this class is for. It's not for the experienced traders to come in and show off, hey, look at me. It's for you guys to get comfortable with the education process and kind of see how we do things. So don't be shy if you need help, guys. All right, where was I? Whew. I'm going to back up just a little bit here, and we're going to go back to the education page and just help you guys figure out what it is that you're looking at, where you can find it, all that good stuff. Awesome. So let me know, Bobby T. I don't know why, but T just sounds good at the end of your name. Bobby T. You sound like an old 50s song or something. All right, software user guide. This is where we just found the screen capture link. Guys, this is all of your Nexgen software using on NinjaTrader information. opening NinjaTrader, closing NinjaTrader, going through, making sure that you're connected to data, scaling your charts, adding stops and targets, all these things that you need to be able to do, just that basic functionality. I've got my software. How do I use the platform to its fullest extent? All of this is for you right here. If you have a question with NinjaTrader, chances are the answer is here. But guys, here's the cool thing. If you're in the classroom and you need an answer and I didn't get it to you, or you can't find it, let me raise your hand. Let me try to help you. If I can't help you, Jason and Tech can help you. We will get you exactly where you need to be when it's time, and all of that good stuff. So that's your software user guide. I'm sorry. Guys, I had an extra cup of coffee today. Little honesty here. I'm a little wound. I don't usually do 3 cups, but I did it today. I was feeling a little sleepy. Let's go to the tutorial section. Everything that I talk about, guys, this is your tutorial section. And I'm not going to lie. If you bore easily hearing the same thing over and over, work through that. Because the more times you hear something, the easier it becomes for you to turn it into habits, to turn it into practice. So the first hour of class today really focuses on the absolute best of the best. And that comes from the tutorial section. Your first 30 days and beyond, consistent winning trades, guys. Focusing on the high probability trend trade. I know a lot of you are adrenaline junkies. You want to be busy all the time. I want to catch every move. I want to be in everything. Well, guys, I'm going to respectfully request that for your first 30 days, you focus on the best of the best. For your first 30 days, keep yourself focused on the one simple trade that repeats itself on every market, every day, so you can be a trading success. Because what does success do for you in the beginning? Creates confidence. It creates trust in the rules. It creates an ability for you, more than anything, to be able to read your charts, to be able to read your indicators, to be able to bring the information that it's giving you and determine whether or not you have the advantage to enter a trade. 90% of what we do is going to be chart reading, guys. 90%. We're just going to be reading indicators. That picture that I just took, that wasn't a trade. It was just chart reading. It was talking about what I see and whether or not I have advantages. Chart reading is going to incorporate 3 essential elements. You're going to be able to understand where the market is likely to continue, and you're going to be able to use that continuation point for an entry. You're going to understand where the market is likely to go, and then you can use that area for stops, for targets, and make a very educated decision on when it's time to exit a position. And then you'll understand where the market is likely to stop. And these are what we call termination conditions. And termination conditions keep you from trading into an area where the market may reverse. That's that picture that we just took, right? Guys, Fibonacci is unbelievable. Price bounces off of Fibonacci so often that we've identified it, we've named it, and we're going to teach you how to recognize it to make sure that you have every advantage going into a trade. So we're going to take the high probability trend trade. This is my focus for the first hour. This high probability trend trade, high probability trade. You notice that I'm taking everything from the manual. Guys, there's no secrets here. A high probability trade, the one that we're going to focus on first, is defined as when each and every indicator on every chart agrees with the rules for the trade. This should be your focus for the first 30 days so that you can really put yourself in a position to be able to read your indicators. All the triggers will be their strongest, no termination conditions exist, no trouble spots between your entry and the target. Guys, this is the best of the best. This is a trade that we talk about in the first hour, that when you execute the rules, when you follow that checklist that I just put in the room, this is a trade that typically wins 70 to 80% of the time. The time that you spend on this high probability trade, the educational investment that you make, is going to expand your trading plan. You are not doomed to only one trade, and that's what traders think. Oh, I need more. I need more. Your ability to read charts will take you to a medium probability trade, and this is when most indicators line up for a trade. However, small issue exists. Your chart reading is going to allow you to identify that issue. And when you execute medium probability trades, you'll take the trades and manage them assertively. Your chart reading will allow you to manage them assertively. If there's trouble in your way, you may take a portion of your position off at that trouble spot. Your chart reading will allow you to identify that trouble spot, and then you can reduce your risk to a zero loss level. Did you notice that I went back to chart reading, 3 times, 4 times? Let this be your focus initially. Learn to read your indicators, and then everything else just tends to fall into place. It's pretty amazing. So we're going to focus on the high probability trend trade. It's 3 rules, 3 advantages. And these 3 rules are going to come about, look at all these pictures I've taken today, on 2 charts. So new users, write this down on a piece of paper. Let the 13-2 lead the way. Let your large chart tell you if it's time to look for an entry. And you're going to use the most current bar on your largest chart, this 13-2. And the 13-2 is a broad stroke of a brush. You're going to take this broad stroke of a brush and you're going to recognize advantages. The first one is you're going to be able to determine the overall trend of the market. If the background on your 13-2 is green, you are in an uptrend. And if you're in an uptrend, you're only looking for rules to be met for high probability trend trades long. If you are looking at your 13-2 and the background is red, you're in a downtrend. And you're only looking for rules to be met for high probability trend trade short. Guys, trading with the trend is really going to be the first advantage, your first key advantage, edge, looking for the high probability trend trade. Next, you're going to be able to gauge the overall momentum of the market. And this is rule number 1 for a high probability trend trade, making sure that you have the advantage of momentum. And then also on the 13-2, guys, we're stuck on one chart in the beginning, making sure that everything is right for us. We're going to be able to recognize whether or not a termination condition is present, whether we've reached one of those areas where the market is likely to stop. All of this happens on the 13-2. Rules 1 and 2 out of 3 for a high probability trend trade come from this larger, slower chart. When rules 1 and 2 are true, then we go to our entry chart. And this is your 5-1 chart. It's a smaller, faster chart. We are going to refine that broad stroke of the brush. We are going to recognize our best of the best spot for entry. Remember chart reading, that area where the market is likely to continue. We're going to use this point for entry, and it's going to allow us to reduce our risk and to maximize our profit potential. 2 charts, 3 rules. I want you to allow it to be simple. I want you to embrace simplicity. Don't try to overcomplicate it. People think that, man, if this simple approach is good, this complicated approach is going to be way better. I need more charts. I need more indicators. I need a couple news sources. I have to have CNN playing on the TV in the background in case something happens that can move the market. Guys, keep it simple in the beginning. Trust me on this one. So 3 rules. I'm going to paraphrase them real quick. I'm going to type them in here. These are 3 things that should be written on your chart every time you take a trade. Every time you take a trade, you should be writing these rules on your chart. And not only writing them, but making sure that they're true. Rule number 1 says after a breakout of a Fibonacci or after a new top or bottom, causing a full reversal, the small triggers must be strong and located outside of the trigger lines to look for trend trade rules 2 and 3. So rule number 1 reminds us that we have to have strong triggers in order to even look for rule number 2. Rule number 2 says don't trade in any Fibonacci areas that are expected to hold, those termination conditions. Rule number 2 says wait for that Fibonacci area to break before continuing to take trend trades in the established direction with strong triggers. Rule number 2 is going to remind you that rule number 1 has to be in play in order to keep looking for a trade. And then rule number 3, guys, I'm not going to lie, I don't care for the way it's written on the page here. I'm going to get John to amend that eventually. But it essentially says use a limit order to buy or sell a pullback at an area inside of favorable large triggers. 3 rules. Use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Areas can be, I should probably add this in there, right? Areas can be fibs, Fibonacci support or resistance. It can be a mid-band, or it can be one-to-ones. So 3 rules, giving us 3 very distinct advantages. Rule number 1 is going to give us the advantage of momentum. Rule number 2 is going to give us the advantage of a clear path. And rule number 3 is going to give us the advantage of an entry where the market is likely to continue. And that was some of the worst typing on my end ever. So I'm going to try and fix this real quick. But I'm putting this in the room, not for me, guys. I know this. This is for you. When I type something in here, when I copy paste something in here, it's because it's important. It's because I think it's something that new users should focus on. So there's your 3 rules. There's your 3 advantages that they provide. I'm going to take a picture of this. And I'm going to give it to you in the form of a picture. And I'm going to encourage you to maybe put that picture in your spreadsheet. So we're going to break down each rule, guys. What do these rules mean to us? Rule number 1, strong triggers. What's a strong trigger? Well, in an uptrend, a strong trigger means that the smalls are above the large, that the large are wide, they're angled in the direction of the trend. It means that there's a space created between the two, and it's this space that lets me know that the odds are favorable for the market to continue up. In a downtrend, the small triggers are below the large are wide, they're angled in the direction of the trend. It's the space created between the two that lets me know that the odds are favorable for the market to continue down. So rule number 1 gives you the advantage of odds favorable momentum. Guys, we're not in the business of being first. We're not even in the business of being last sometimes. What we're doing is we're looking for a decided advantage. When we're going to look for this high probability trend trade from that point when the small triggers break away from, accelerate away from, until they return. This is your area to look for the high probability trend trade. As you learn to study, and we're going to talk about study, you're going to see these bars when you have odds favorable momentum. Sometimes they'll have these tails or these wicks. This just means that price is lower than the midpoint of the bar. These wicks are retracements, small pullbacks in price counter to the underlying trend that you'll be able to recognize on your entry chart. And I'm going to show you how to do that. In a downtrend, the same idea. Looking for those wicks, looking for those tails from the point where the small triggers accelerate away until they return back inside. And the reason we wait for that odds favorable momentum is because when the small triggers work their way back inside, this is what we call a weakening of the large triggers. When you have weakened large triggers, anything can happen up or down. So new users, demos, people getting back to consistency. Give me a why in the room. Rule number 1, this is it visually. Strong triggers. This starts the process of you looking for a high probability trend trade. Guys, you can pull up a 13-2 chart and you have a template that will allow you to only put trigger lines on that chart. You want to identify strong triggers? There you go. No tails, right? No potential entries. Here's those large triggers working their way back in. Circle a tail. They haven't come back in completely yet. Circle a tail. Guys, this is going to come in handy in a little bit as we learn to study. As you scroll back, the things that you're going to recognize is that there's not odds favorable momentum every minute of every day, which means that you're going to have to sit on your hands sometimes. Here's those small trigger lines accelerating away. That's the beginning of the process for odds favorable. Let's circle a tail. As we scroll back and look, well, here my trigger lines are already inside. I don't want anything to do with these tails, not if I'm a high probability trend trader. But right here, odds favorable, right? Small's above the large are wide, they're angled in the direction of the trend. Circle a tail. Guys, what I'm doing right now is I'm teaching you to recognize the first advantage. And I'm also helping you understand that this was a 2-hour stretch. A 2-hour stretch in between circles. Day trading is a game of patience. You're a professional waiter. There's a tail. Coming back, no tails present. No tails present. Not every dollar in the market belongs to you. Odds favorable, there's a small tail. We'll see if it works. Guys, you can do this. You can do this on your chart. Apply that template. Go back for the day. See how many opportunities there were with odds favorable momentum. Are you guys with me on this so far? Bobby T, feeling good about it? 2-hour stretch is good, right? I feel the same way. I waited 2 hours for my trade this morning. It was worth it because I won that trade. All right, guys, there's our odds favorable momentum. It's all right, Elvis. If we miss one, that's okay. We'll go back and find it later if we need to. Bobby T, it depends. I teach this class for 3 hours every day, so I don't trade during the class. I wake up at about 5:30 Central, and I take about 2 hours in front. And today I had one trade. I think yesterday I had one trade. Tuesday I may have had 4 or 5. But again, I'm not in the market as often as you guys are. So far for the week, I've had 7 trades. We're kind of doing a little test this week. The only trades that I'm taking are high probability trend trades, what I'm teaching you guys right now. I've had 14 trades, 7 trades on a 2-lot, but I'm at 86% winners. Not so bad, right? This is what we're teaching. We're teaching you to get the advantages. So let's talk about the advantage of a clear path. Rule number 2 says no termination conditions, right? Well, what's a termination condition? It's a Fibonacci-based indicator that may reverse the market based on a comparison of the area and your triggers. The areas can be, guys, you're going to hear me say areas a lot. When I say areas, I mean blue Fibonacci support, red Fibonacci resistance. I mean yellow 1-to-1s, cyan divergence low line, magenta divergence high line, or a large chart midband if the large triggers are a full bar away. These are areas that may reverse the market. This one right here, I'm going to see if I can get it dropped to the bottom. Any third divergence in the same area, this isn't reaching a line, this isn't reaching some dots. This is 3 losses of momentum in the same price range. And I'm going to teach you how to identify change happening on a smaller, faster chart before you can see it on the large. But first, let's just go through the very basic. How do we recognize a termination condition? It's a 2-step process. Price, and guys, when we say price in this classroom, we mean these price bars. Price moves up and down throughout the day. When these price bars reach an area of support, I ask myself, where are my trigger lines? Well, all of my trigger lines remain above that area, and therefore, that area is likely to stop the market. Remember chart reading. Because we've reached the area, because the trigger lines remain above, I'm not looking for short trades. I've reached a termination condition and rule number 2 isn't met. Rule number 2 says wait for an area to break with odds favorable momentum before trading in the established direction. So if I reach an area and all of my triggers remain above, up here as well, no more short trades. Rule number 2, I've taken away the advantage of a clear path. When is an area broken? When my small triggers and my large triggers break through that area of support. Now that area of support begins to act as resistance. Guys, this is an area broke with odds favorable momentum, looking for opportunities. Let me circle a wick for high probability trade short. This is your high probability. High probability, brand new, here we go. Excuse me. I do want to talk about a trade that's a medium probability trade. And I only want to do this because areas have the potential to break. Not every area bounces. You see it right here. When your small triggers break through an area with odds favorable momentum, but your large triggers remain above that area, this is what we're going to call a 50-50. Guys, this is an area that is not broken. 50% of your trigger lines have made it through. 50% have remained above. This is not an indication of your chances of winning the trade. It's not even an indication of whether or not it's going to break. It just means that 50% of your trigger lines are below and 50 are above. You could call this a straddle look if it makes you feel better. One up, one down. Whatever you want to call it that lets you know that the area is not broken, but has potential to break because of momentum. So when you have this look, sometimes this is you setting up, waiting for it to break. Pause for just a second. And if you have a 50-50 look and you're looking for that trade, entry conditions must be perfect on your 5-1. And we're going to talk about what those are as we go through. I've got some great pictures for 50-50 trades that we took yesterday that I'm going to share with you guys. But for my high probability trend trades, price reaches an area, no triggers break through, no trade. When the small and the large break through, then we can start looking for the trade rules again. Termination conditions happen all the time. Fibs are there all day. Some are going to hold, some are going to break, some are going to create momentary bounces. Price reaches resistance. Where are my trigger lines? Your trigger lines are below resistance. No more long trades. It's a termination condition. It's likely to stop the market. It's not guaranteed to stop the market, but you've given away the advantage of a clear path. Price pulls all the way back down to support. All of your trigger lines remain above support. You've given away the advantage of a clear path. Rule number 2 has not been met. No short trades. 90% of what you do is going to be reading your indicators. When price pulls back up to resistance, this divergence high and resistance again, all the trigger lines remain below. This is what we call a pivot stop out. This is your pivot, and a lot of people start going short at that red line. This is where they get stopped out, that little movement above the divergence high, and then it trades back the other direction. When you get a pivot stop out from a key Fibonacci area, it's a very strong indication that the market may reverse. And this look, when put together with fibs, typically creates pretty big moves. When a termination condition creates a full reversal, meaning that the large go from green to red, they pinch and roll, and it gives you odds favorable momentum. Guys, this is what we call a strong top. This is your best of the best. This is that termination condition on the 13.2. And when that termination condition on the 13.2 sets you up for a rules met, high probability trend trade, that's your best of the best chance for success in the beginning. You'll also see it from a bottom. This pivot creates divergence, a loss of momentum. That cyan line prints to the right. This in itself is just a pivot with a loss of momentum. It's not a termination condition. It's when price reaches that cyan divergence line and you use that magic phrase, where are my trigger lines? Well, they all remain above. Now we have a termination condition. This termination condition creates a full reversal. The full reversal gives me odds favorable momentum. There's my best chance of success. This is a pivot stop out of a low. Very strong indication that the market may reverse. I want you to remember the 13.2 leads the way. The rules are in order for a certain reason. In this trade, dead center, odds favorable momentum to the downside. Smalls are below the large are wide, they're angled in the direction of the trend. If I was only looking at trigger lines, the odds are favorable for the market to continue. Awesome, Shane. I'm glad to hear that. It all starts to come together. It really does. It takes about a week, and then it starts to click, and it's a step forward every day. So good. I'm glad to hear that. Price reaches 1-to-1s, even with odds favorable momentum. All of your trigger lines remain above that area of support, guys. Rule number 2 is not met. Termination condition. Look, it creates a full reversal, and it gives me odds favorable momentum. There's one of those tails, and there's one of those circles. Guys, this is your best chance of success in the first 30 days. That's your high probability trend trade. Sometimes you'll get odds favorable momentum, you'll get a tail, but it doesn't come from a termination condition. Still a great trade. That termination condition, that strong bottom, isn't a requirement. It's just an advantage. Our next termination condition is going to help you identify when that market is turning kind of in the middle of nowhere. Guys, we're well beyond the fib. We're not quite to the 1-to-1s, but that market gave us a big push up. Using your smaller, faster chart, you can identify this change quicker than you will on a large chart. 3 divergences in the same price range may terminate the trend. And it's very powerful when the third divergence happens with the small triggers inside of the large triggers. So what's divergence? I'm going to take another picture. When these pivots form, pivot means the market went down and then it headed back up. And you see that divergence line, that cyan line from a low, that magenta line from a high. It lets you know that while price made this move, momentum didn't follow. It's the easiest way for me to describe divergence. There's indicators in the background, there's programming, there's tech stuff. Guys, I'm not that smart. I read indicators, I don't program them. There's your second loss of momentum. There's your third loss of momentum. And you'll notice that your trigger lines go from odds favorable on your 5-1 to anything can happen, right? We've lost momentum 3 times. We've gone from odds favorable to anything can happen. Guys, this is a termination condition, a small chart termination condition that can change the direction of the market, even if it's momentarily. So by using this termination condition, recognizing change on the smaller chart, it can help you identify when it's happening on a larger chart. The second half of that is as you grow from high probability trend trades to medium probability trend trades, maybe you enter a trade right here. You can identify the change on a smaller chart and take an exit after that third divergence rather than hoping that it continues to go down. So two-part process. One, keeping you safe from taking trades where the market may reverse. Two, managing trades that may have an issue and need to be managed assertively. So guys, are you with me so far? Odds favorable momentum. Rule number one, the advantage of a market that's likely to continue in the direction of the trend. No termination conditions. Rule number two, the advantage of a clear path. So let's go, we're doing it a little different today, right? I'm going to put my indicators back on, load that template, and let's go back when we had odds favorable momentum and make sure that they weren't trading into termination conditions. All right, so this one right here, the large hadn't quite cleared. I'm going to take that one off. Here, price reach resistance, the trigger lines haven't gone through. I'm going to take that one off. Guys, I want the best of the best. Directly into resistance, I'm going to take it off. I'm going to circle this one. This one even gave me a reversal bar, but I'm at the tail end of momentum. I have no termination conditions. We're going to see what that one did. As I come back directly into one-to-ones, I'm just going to be patient. I can leave that one. It didn't hit anything. I can leave this one. It didn't hit anything. I think that's it for our circles. Nope, and there's one more where everything cleared. So guys, now we have circles. We only ended up with 1, 2, 3, 4. That's it. We ended up with 4 circles. Pre-market, the market hasn't even been open an hour yet. So 4 pre-market circles with the advantage of momentum and the advantage of no termination conditions. So now, are you guys ready for the best part? And this one still amazes me. Let's pinpoint where the market is likely to continue. And we're going to do this a lot today. So during the live market, this is going to be the look on the 5-1 chart. When the 13-2 rules are met, when you have strong triggers, when there are no termination conditions. And your only thing right now is you're going to say to yourself, you know what? It's time to look for a trade. Rules 1 and 2 are met. It's time to go to my smaller chart and pick my entry. So we're going to focus your attention on the large triggers. Are they up? Are they wide? Are they trending one on top of the other? Absolutely. So let's look for areas. Remember, areas can be fibs, midbands, or one-to-ones. Rule number 3 says that I'm going to buy a pullback. And a pullback is a small retracement in price counter to the underlying trend. I'm going to buy a pullback. That pullback is going to be to an area. Fibs, midbands, one-to-ones. And those areas are going to be inside of favorable large triggers. All we've done now is identified a couple areas, identified strong triggers, but we need a pullback. And a pullback starts with a reversal bar. All of these green bars, we're going to wait for the first red bar down. That's your reversal bar. That signals the beginning of the pullback. And now it's time to identify your window of opportunity. And I kind of giggle every time I see window of opportunity because John posted in the room once that he was looking for his woo. And I had no idea what he was talking about. I thought it was a Ric Flair thing. Window of opportunity for long trades is going to be from your highest point of support inside of favorable large triggers to your lowest point of support inside of favorable large triggers. This is the area where the market is likely to continue. Yeehaw. For a short trade, it's going to be from the lowest point of resistance inside of favorable large triggers to the highest point of resistance inside of favorable large triggers. This is the area where the market is likely to continue. I'm going to right click and I'm going to activate a limit order. I'm going to buy the market at the top of that window. In order for that limit order to be filled, the market has to come to me. I'm not chasing price. But if the market comes down to the top of that window, that area of support inside of favorable large triggers, guys, I am long. My anticipation is that the market is going to go up. My protective stop, my initial stop is about 12 to 14 ticks, and it's below that window of opportunity. You guys with me so far? We wait for a reversal bar. Order of operations, everything is if then. You get your reversal bar, identify your window of opportunity, enter at the top for longs, the bottom for shorts. Stop goes where the market shouldn't. Meaning outside of that window of opportunity, outside of that space where the market is likely to continue. Guys, I will take this trade 1,000 out of 1,000 times. I have the advantage of momentum of a market that's likely to continue in the direction of the trend. I have the advantage of a clear path. There's no Fibonacci-based indicators in my way, letting me know that the market may reverse. And I have the advantage of entering the market from the area where the market is likely to continue the trend. Remember, on that high probability trend trade, 70 to 80% of the time, this is your outcome, target reached. And the best part, absolutely, Bobby, and I'm going to show you why in just a second, and that's a great question. In order for this on a smaller, faster chart to get back to that best of the best area, these are typically going to turn, at least a little bit. But even though they've turned, aren't they still well outside of the large? We still have odds favorable momentum. This is kind of a necessary evil to get us back. My initial stop goes from where the market shouldn't go to below that reversal bar that has me go in the direction of the trend. I can use Fibonacci for targets. Guys, this is your trade. 70 to 80% of the time, this one is successful. So Bobby, here's the picture to answer that question. And this is what helped me a lot. And this is such a common question. Should I be concerned about the small triggers turning against me on the smaller, faster chart? No, because remember that the momentum that gives you an advantage, Bobby, is gauged on the 13.2. The advantage of odds favorable momentum comes from that larger chart. And look at these triggers. If you're taking this trade, this thing is a freight train to the upside. This one is after the fact. This shows a trade that's already done what it's going to do. You'll notice that there's no termination conditions at this bar with the wick. We haven't reached a Fibonacci area. There's that circle that we talked about. If that circle lines up with an area of support inside of favorable large triggers, I have a high probability trend trade. Guys, this is your study tool. This is how you're going to create trust in the methodology. This is how you're going to create trust in these rules. You're going to go back and study just like we did this morning. You're going to look for this on your 13.2 and make sure that it lines up with this on the 5.1. Are you guys with me? Every time you study and you get this picture, your job, I want you to do this, is I want you to take this picture, I want you to write your rules on the chart, and I want you to share it to screencast. And I want you to do two things with these pictures. Guys, I'm not only here for your live trades. If you go after class today and you study 10 days worth of these setups, show them to me. Say, hey, Mark, am I reading this right? Odds favorable, no termination. This is my entry. I know it's after the fact, but I'm building trust in this look. Did I do this right? And then we're going to talk about it. If you did it right, drop that thing into your spreadsheet. Go back, take a look at it. Build that mental awareness. Guys, this is your best of the best. This is the one that gives you all the advantages. This is the one that I'll take every time it sets up because this is my trade. We've already done it on the 13.2, right? We've already looked for those circles. Let's scroll back and see if we had any entries. Well, there's one, and I knew that was one because I took it this morning. This is a trade that I waited 2 hours for. Small's outside of the large, and it pulls back right to an area of support inside of favorable large triggers. Do you guys see it? High probability trend trade, right? Where's our second circle? What did we have? 4 today over the course of 3 or 4 hours? Pulls back to a mid-band, not inside of favorable large triggers. Guys, guess what? That's not your trade. That's not your money. So we scroll back more. And there's a pullback. It misses the mid-band by a couple ticks. This one might not get you. What did this look like at 3:51 a.m.? Right after that European side opens up. There it was right there. Look at all that momentum. Look at that short little pullback. I'm going to say, because I am going to err on the side of being super conservative, that this one just didn't fill you and you had to watch it go without you. Not your money. Same thing here. Didn't pull back. Guys, remember, this is pre-market. We're looking at pre-market stuff. But what did we learn? We learned that if you sat on your butt for 3 hours and you traded a very mechanical, methodical approach, you're up $300 before the market ever opens. Not so bad, right? You feel good about that? I hope so. Day's just getting going, guys. There's high impact news coming up in 5 minutes. 5 minutes, high impact news. Look at that. Odds favorable. We're 50-50 on that pivot stop out. 3 minutes, Elvis. Thank you for that. Guys, I'm going to leave the S&P up so that you can watch it. When I get back, we're going to start looking at your charts. Didn't get you? No, that one came close, but not quite, huh, Paul? I'll be back in a few minutes, guys. Watch the S&P. Let's see if news creates a reaction. When I get back, I'm going to start looking at charts. We're going to go through and we're going to do some bar by bars. We're gonna pick entries. So there's going to be a lot of participation today. I'm going to go refill my water. Say good morning to my wife. I'll be back this way in just a couple minutes, guys. Let's jump into that second hour. Did news affect the market at all? Boy, sure looked like it did. Guys, this is why every morning, forexfactory.com, I go in, I take a look. I like to know what's going on. If you were thinking, man, look at this, I'm starting to get odds favorable, I've got no termination conditions, maybe I should take that entry, it sure did go against you quick. Here's kind of the cool thing though, even with news, what did that one look like? Right back to the mid band, not quite a high probability trend trade. All right, so let's go back, guys. I'm gonna start looking at some pictures. We're gonna see what you've been doing, how you've been doing it. Nexgen Ben started us off today. Nexgen Ben has a little different approach. He's just taking a continuation style trade. This is a smaller, faster chart. His larger chart was strong down. He recognized divergence coming from an area. As it pulls back, it may come to a higher point. I love everything about this. He takes a nice entry, takes off 20 contracts just above support. Quick $4,300 to start the day. Nice trade, Ben. Guys, here's the one I waited 2 hours for. Here's our checklist. Is the market coming from a good top or bottom? Yes, it is. I put this checklist in the room for you. I'm going to do it again just to make sure that you have it. Guys, I can't stress this enough. This is the one for your first 30 days. Does it have odds favorable momentum? Yes, it does. Does it have no termination conditions? Absolutely. Is there an area for entry inside of favorable large triggers? There sure is. Guys, my initial stop, 12 to 14 ticks, kept me safe. Both targets reached. Gary, using a checklist as well. Exact same style trade. He had a good bottom on that S&P. He didn't have any termination conditions. He didn't have odds favorable triggers, right? He had anything can happen. He recognized that. He identified it. He has a checklist for it. So he takes the area from the lower part of the window, and it just pushes down. A little anything can happen triggers mixed with divergence. Stops him out, and he says, but this is my trade, and he gets back in. Gary, here is your heads up. Divergence on your 8 range typically pushes it a little lower. I know you had that HVA, maybe waiting for that next reversal bar. Helps a little bit. It's a good looking trade, nice recovery, great heads up trading, getting back into the market when you still had the advantages. All right, Gary, you had not a good top, pivot from beyond the area. Guys, I'm scrolling back and forth here. I like this picture because this is a pretty good lesson. When I get a pivot from beyond the area, sometimes it's overrun. Sometimes it's just the buyers pushing up past it. But when I have a pivot from beyond the area, and I get one of those 50-50 trades, and this is what that is. Smalls have broken through, the large have not. The area has the potential to break, but it hasn't broken yet. And then I end up with 2 losses of momentum. Not my trade. This becomes a difficult trade. The area is not broken. 2 losses of momentum. You've just given away the advantages on a 50-50 trade. Remember we talked about that one. I like my 5-1 to be perfect on a 50-50. Let me scroll over. The smalls are through. I'm going to share this picture. I actually have 2 pictures on this one. So Gary, here's your first picture. Here's, guys, in my opinion, this is the perfect 50-50 trade. Smalls are through, large are not, no divergence, strong triggers, small window of opportunity. That, in my opinion, is the absolute best of the best regarding a 50-50. And it gives you enough room to manage assertively, because remember, that's what you do on a 50-50. Here's the exact same scenario. Strong triggers, 50-50. Now we have a loss of momentum. Now we have small triggers closer to the large. This is the one that loses. Guys, these two pictures, for new users, these two pictures are huge, because it's going to help keep you in higher probability trades, which means that you're probably going to win more than you lose, which means that you are going to be happier, confident, trusting, and enjoying this ride just a little bit more. Gary? Gary, pivot, stop out. It's a little early, just a continuation. Guys, this is a different style trade. And Gary, just because I know you're going to be working your way back into another combine, you've got a market that's range bound. You have resistance that held. You have support that held, resistance that held, pivot, stop out, straight up into resistance, but you had room to the resistance, and I know why you did what you did. You had multiple divergences. The smalls are coming up. HVA line. This is the Ron trade. Termination. It's a low probability trade, though, especially with smalls below the large. The trend is down. All of your large triggers are down. Large triggers are down. Smalls are... So you're fighting a lot on this one, Gary, and I know that you're looking for that consistency. This one worked out for you. That's a tough one, though. And then John just taking pictures. Nice job. There's one of those pivot stop outs. How do you identify a range-bound market, guys? Resistance, support, resistance, support, resistance, support. Let it break. Wait for the advantages. Let everything come together. Alex, good morning. Gary, we'll talk about HVAs today. Alex, let's see what you did. Smalls above the large. Large haven't made it through. You know that it's a 50-50, right? Coming straight from those one-to-ones. That's okay. You had an area for entry. So Alex, for me on this 50-50, and you have the 8-range chart. Guys, if you're gonna have a tool, use the tool. I firmly believe this. If you have a 50-50, and one of your charts has that loss of momentum that's also coupled with an antenna bar, that's a tough one. I don't care for this trade because of what this chart says. If you're 2-chart reading, it's a good shot at a 50-50. But remember, put your stop where the market shouldn't go. If that thing comes down to 90 or 87, it's outside of that window of opportunity, isn't it, Alex? It's below those large triggers. It's on the wrong side of everything. One of the advantages of having that tight little window of opportunity, of being able to identify this, if the market goes here, that's not my trade. Take your small loss. That's okay. No reason to give up $260 on an area that hasn't broken. Does that make sense? Or even if you want to incorporate the 8 range, Alex, I think the first way to incorporate it is respect the divergence. The second way to incorporate that one, Alex, is maybe wait for a signal. And you got a signal right from the best of the best spot, right? So if you waited for this signal, Alex, put your stop 2 ticks below it, right there at 87. It either goes or it doesn't. But then you've got that small loss. It's a small little risk for a potentially large reward. Does that make sense? Guys, the 8 range is your next chart. The 8 range is your confirmation chart. This bar confirmed this area. Put your stop. If it's going to go, this is where it's going from. Alex, another thing, and this is just a little chart reading thing. When you get the reversal bar, when you get the breakout bar, it creates that high volume area line. If that market is going to go down, it loves to do it from that line. So when you got this reversal bar off the HVA on a 50-50, another reason to just go, you know what, I'm going to wait for a better shot. Great picture. I think there's good lessons in that one. Gary, let's see what you're doing. Termination condition. I think this is the exact same trade, isn't it? Yep. Exact same trade, exact same reasons. On a 2-chart setup, that's your best spot. No reason to give up 18 ticks per. That's a huge loss on a medium probability trade, especially when you're looking at 50-50 on your largest chart. Had a lot of reasons, I think. AS Kid. Welcome to the class. This is a new name. Smalls below the large. The large are wide. They're angled in the direction of the trend. There is no divergence. You take a picture perfect entry and you get out at the area where it's likely to stop. AS Kid, welcome to the class. And thanks for showing such a beautiful high probability trend trade. Nice job. Or actually a perfectly executed medium probability trend trade. Do that all day long, right? Jose G, nice to see ya. There's a good bottom, strong triggers, no termination, no divergence, pull back to support. And Jose, you are at a divergence high. And you've got your stop at an area of support inside of favorable large triggers with odds favorable momentum from a good bottom. This is where maybe, and Jose, I'm not sure if you're in here listening right now. This is where maybe, and let me talk about what I would do. And guys, my plan isn't your plan. I can't stress this enough. Your plan has to be your plan. But let's talk about this one. This is a rules met entry for a high probability trend trade, isn't it? Odds favorable, 50-50. That's where we anticipate this market to pull back to. Guys, give me a Y in the room if you see it, if you understand what I'm saying here. Because this is an important management lesson. So what if, call me crazy, what if I said to myself, you know what, it's a 50-50. Rather than give it all back, if I get a reversal bar on my 5-1, I'll exit this trade. And then I'll reevaluate if it pulls back. Rather than giving up, oh my gosh, we're at 12 here. Rather than giving up $200 worth of profit. Does that make sense? Why not give back $50, $60? And then if it does come back here to where you were looking to be stopped out, Jose, enter that market if there's no divergence, right? Make money twice in this range rather than just hoping. This is just me. This is 2 charts, 13-2, 5-1. This is how my brain works. Guys, I'm doing this for one reason and one reason only. I want to make money. Is there anyone in here that doesn't want to make money? Anyone in here that's doing this just for the fun of it? You got nothing else to do on a Thursday? Make the money, take the next entry, right? You have the advantage of seeing a potential termination condition. You have the advantage of knowing where it might bounce. Use those advantages, and that comes with time. Jose G, great looking trade. Thank you for sharing that. Thanks for giving me an opportunity to talk a little bit about some management. And there you go. There's that same trade, right? 50-50 on a termination condition, Kevin H. Loss of momentum on a 50-50 trade. You take it anyway. You get stopped out. You say good bottom, help, feels like you're regressing. Kevin H, are you in the room? Kevin H, maybe he's off making money. Cool. Are you ready, Kevin? So I took 2 pictures and posted them in the room today. I want you to see these. Guys, as you learn to read your indicators better, as you look for consistency, and Kevin, I saw you typing, so I know you're listening. Here's a 50-50 trade, right? Smalls are through, large are not, but I have odds favorable momentum. So if I compare this look to what you had, Kevin, it's the same look, isn't it? It's a 50-50 because we know that a divergence high is a potential spot, right? It's all about the money, Shane. So 50-50 trade. Here's an entry without divergence. It pulls right back to the area. And this one gives you, we'll call it 6 points, 5 points worth of profit. You with me so far? No divergence, small window of opportunity. Let's compare. Divergence, your window of opportunity goes from 83.01 to 82.92. So I've got a 9-tick window of opportunity. And I have a loss of momentum on an area that hasn't broken. I almost said breaking. So here's that same setup. One of these is picture perfect. And Kevin, you're not regressing, you're just excited about the advantages that you're able to read. One has no divergence. One gives you a tiny little window of opportunity. The second trade here has divergence, that loss of momentum. It also has a wider window of opportunity. Kevin, does that help a little bit? Really, anybody that's struggling with these 50-50 trades, this picture right here, for me, I shared this with John yesterday. I think I shared this with a couple other people that I talked to. For me, 50-50 trades, that's the one. That's beautiful. This one, there's too much. Area's not broken. I'm losing momentum. The smalls are inside. I'll just hold off and wait on that one. And it's going to go without me every now and then. I'm cool with that. But I think as far as 50-50 goes, that's a great lesson. Oh, man. I could look at this picture. That's all right. So, Kevin, I'm going to ask you here. Are you ready? You're in a slump. That happens. Everybody has bad days. How many losers have you posted in this room in the last week during this slump? Have we talked about them? So, guys, one of the biggest advantages that you have, 2. I'm assuming that your slump is more than a 2-loser slump, right? Let me help you, Kevin. That's on you. All I can do is ask. But I can tell you that the people that post the most, especially the losers, Kevin, it may be the simplest fix ever. It might be that you took 10 50-50 trades with divergence on every one of them. It might be that you're banging your head on termination conditions. Let me look at your charts. Let me see if I can help. That's why I'm here, guys. 15 hours a week. My only goal in life is to get you to your goal. Me too, Gary. Great top. Clears the area. Waited to pass the danger. Guys, Ron's chart doesn't make any sense to new users. I want you to know this. Ron's charts, Ron, I'm going to start saving your pictures. Guys, the last 30 trades that Ron has posted in this room look exactly the same. 100%. 100%. The entry conditions are the same. The exit conditions are the same. Chew on that. The one thing he does is he picked the one thing that he's comfortable with, and he's working it. Shane B, trading off that termination condition, right? We've reached it. Price reached. Support. You take a picture-perfect entry, and I love your exit. Man, if I'm going to trade directly into a termination condition, Shane, this is how I'm going to do it. Can we talk about everything that I see on this one? Because my job's not to go, damn it, Shane, you messed it up. You broke a rule. I'm so mad at you. My job is to also help you realize what an amazing job you did. Guys, price reached an area of resistance, right? Where are your trigger lines? They're all down. They're well below, right? If we just talk about rule number 2, isn't that area of resistance at 74 and some change likely to stop the market? Shane, you may not have been thinking about this in the moment, but do you see how that works out for you? There's an advantage, right? So I'm going to put an arrow. That's one advantage. Large triggers are still strong down. There's your second advantage. You don't have odds favorable momentum, but they're at the very bottom. They're just losing momentum. That's still pretty good. There's one against it. You're trading directly into support. You have the tiniest window of opportunity that lines up with an area of resistance likely to hold. When it starts pulling back, your smalls are kind of pulling out. They're still outside a little bit. This is such a strong move down that it makes sense that they may come back and retest it with all of this going on, with all of these downward advantages, right? You took the best entry and the smartest exit. So Shane, nice job. The only thing that you have to be able to understand, Shane, is that that one has the potential to go to the moon. Fibonacci is strong. It's not a high probability trend trade. It's a much lower probability trend trade that you took perfectly. Guys, your plans are going to grow. Your abilities are going to grow. Embrace it. Embrace the change. Gary, with this you redeem yourself. You took the exact same trade that Shane took. Shane had fibs. You didn't. So that's the exact same trade. Boy, you and Shane are way off. Perfect little window of opportunity. Small still out. It's only your second divergence. Boom, boom, boom. And it lines up with an HVA and a market flow signal. Gary, nice trade. And Gary, you modified your checklist. Look at that. I love it. We're constantly. On the ES, let's find out. I'm going to let you do the math just because, yes, you match me. So Shane, you don't match me just yet. So Gary, you and I are the same. Shane, you and I have little differences. One thing you can do, Shane, make sure you're doing this every morning. And I just want to be sure. Every morning, just a little maintenance. Get that fresh data. Make sure everything's cool there. If you're not doing that every morning, give it a try. The second thing, and you can have Jason help you if you need it, or just try it, because I think it's a pretty good idea to know how to do this and do this every now and then. Is just start fresh. Every now and then, just rebuild everything. It's good to know how to do it. And you're good. John C., you said you didn't take the trade in the box. Which box? Did I miss your chart? Oh, there it is. I see it. Thank you. All right, so let's talk about it. So John, let's talk about why you didn't take the trade in the box. And John, you're missing a mid-band. Let's go through the rules. Are you ready? Guys, I know it's not a lot of fun, but let's go through the rules. And John, one thing you can do too, click that F up here, stretch that stuff out a little bit, give yourself some room. So is the market coming from a good top or bottom? It's not. It's been in a crazy downtrend, right? So we're okay. Do you have odds favorable momentum? So John, you're looking at smalls above the large are wide, right? Or they're widening. You're thinking, heck yeah, I'm in an uptrend. I've got odds favorable momentum to the upside. Feeling good about it, right? So John, price reached resistance. What's that magic question that you ask yourself? Where are my triggers, right? Where are my triggers, John? Well, they're all below resistance. Actually, two areas they're below. So that lets me know without question I've got a termination condition going on there. I've got an area that's likely to stop the market. So we're not looking for long trades here. Does that make sense? Just no reason. You gave away the advantage of a clear path. John, on your 5-1 chart, I want you to do me a favor real quick. Right click and go to templates and load. And put that 5-1 Renko 032021 on there. And see if that gets your mid-band back. Because remember that we can use a mid-band as an area to take a trade from. You don't have one, my friend. Let me know if that works. If that doesn't work, let's get with Jason and Tech and make sure that you're solid and good to go on that one. There was a question in here that I missed. I want to make sure. AS Kid, you said 5-1 charts turns green. Is this not break the rules? Both charts should be red. So AS Kid, awesome question. Are you with me in here? Is too fast? Which was too fast, John? Me telling you? Right click. Let's go through it real slow. I do that sometimes. Thank you for calling me on it. Guys, one of the hard things about being as familiar with the software as I am is sometimes I need you guys to knock me down a level and remind me that you're not where I am yet. So John C., did I just I didn't. Did you right click and go to templates and load? Once I click load, you talk about the Shane chart? Okay. Once you click load, 5-1 Renko. And then once you have the 5-1 Renko, John, click OK. And that should kind of reload the template and hopefully give you that mid-band back. So AS Kid, I'm going to answer your question in two parts. The first part, and this is going to sound silly, and I hope that it's okay. The first part about it turns green, does that kill the rules? And this is where people begin to interpret. They put their spin on something simple. So when I look at my trade rules, and let me do the simplified version. When I look at the rules for a high probability trend trade, it doesn't talk about the color of the background anywhere. Typically, they're all going to match, without a doubt. They're all going to be red. They're all going to be green. But what happens sometimes, and why I don't like people getting too caught up on colors, is when the small triggers begin to break above the large triggers, it paints the background green. This is just written into the software that helps you define a trend. But if you look at Shane's chart, on the 13.2, the overall trend is down, right? And that's where we're gauging the overall trend of the market, is on that 13.2. He did trade into a termination condition, but AS Kid, as he pulled back to an area of resistance inside of favorable large triggers, his background painted green because his large triggers started to get above, or his small triggers started to get above, but it's still a rules met entry, especially if there's not a termination condition there. So sometimes that small trigger may pull back a little bit. The challenge with this one was the termination condition that he had. But Gary took the exact same trade. And you can see that on his chart, the background was green, but everything is down. It's just that little retracement against him. Does that make sense? If the rules are met, if the strong triggers are there, if no termination conditions are there, if the area inside of favorable large triggers is there, don't get caught up too much on your 5-1. Remember that the 5-1 is an entry chart, and the thing that we're really looking for is an area of support or resistance inside of favorable large triggers. Cool. I love these questions though. These are good. Shane, it wasn't like a train. It was just about anything can happen triggers. I'll show you the train picture. That's the train picture. Small's well outside. That's some giddy up. That's your train picture. That's your, we're at the tail end, but still good. That's where, oh man, there it goes. That's where this trend could potentially reverse. That's kind of the look we had right down there. All right, one more from Gary, and then we're going to talk about writing a plan. Gary, here's twice, right? You're on a 50-50. Gary, I want you to take a deep breath and run a lap. You're on a 50-50 without odds favorable. It looks like it could have it. But there's those two divergences on an area that isn't really broken. And there it is. So Gary, that's 2 today. And this is one of the reasons that I love this class, because I'm going to recognize your weak point. Mine's cookies and cake. I don't walk past cake. I didn't realize that until my wife said, hey, you've walked past 8 cakes and you've taken a bite of every one. Gary, I'm recognizing that you're willing to give up the advantage of a broken area and the advantage of momentum, hoping that the market continues down. So there's your pattern for the day. 2 divergences on a 50-50. It hasn't worked yet for you. All right, guys, let's talk about, he was short. Never, George. It's rude to walk past chocolate chip cookies. And you fought your checklist. But isn't that a great revelation? Gary, I can tell you this morning I was watching the market, and I'm going to show you guys a series of pictures that I took. Because, guys, I take pictures even if I'm not trading. I hope you guys do too. Let me figure out where it was. All right, so this was the one that I did. I had a pivot stop out, right? And there was this idea of unfinished business, guys, where when pivots from beyond the area come back to the mid-band and finish the move. I know this pattern. I've been watching these patterns for 2 years. A lot of people will try to take this long into this pivot stop out and completely ignore the fact that it's a termination condition. So from there, it pushes down. I'm still anticipating the area to hold and to finish the move. And this is the patience piece in trading. Waiting for everything to agree again, waiting for the triggers to come up. That was your continuation opportunity, and it finishes. Letting the termination condition do its job. Guys, I watched this happen, and I knew exactly where I needed to enter the market, and I knew exactly, based on patterns, what it was likely to do. But you ready for the kicker? Dun, 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 dun. It didn't fit my checklist, and that trade isn't on my plan. It was just chart reading. That's all I was doing, was reading my charts. It may make its way onto my plan, but guys, you have to have a plan. Here you go, Elvis. There is a square around it. Letting the small triggers turn and roll above the termination condition. It's that little pullback, that stab back to the small triggers in the mid-band for continuation. There's rules for it, but that trade isn't in my plan. You're welcome. We have a user in here that loves the idea of unfinished business to fib. So I took this little series for him and sent it over so that he could take a look at it this morning. One of the biggest challenges I think that new users have is we talked about Ron. Everything Ron does looks the same. Ron, I'm sorry to call you out in class, but you're doing an amazing job. You're following the plan. He knows exactly what it takes to get him into the market. Guys, writing a plan is so important. And if you're a brand new user, if you're focused on the first 30 days, I've posted this plan in the room a couple times every day. After we talk about this, I'll post it again. This is an example of how to write your plan. This isn't your plan, guys. You have to write it. You have to make it yours. This is an example plan. Use the phrase my trade is. My trade is a high probability trend trade. In order to enter this trade, all I'm doing is defining my entry. In order to enter this trade, I must have the conditions of this checklist met. Guys, how many times have I put this checklist in the room? I don't know, maybe every day for the last year. How many of you don't have a winning trading percentage and aren't using it yet? In order to enter my trade, I'm defining my entry point. This checklist must be met. The high probability trend trade checklist, typically 70 to 80% winners. Is the market coming from a good top or bottom? Is there a termination condition that created a full reversal? Yes is great. It increases the likelihood of success, but it's not mandatory. Remember, we can still have a high probability trend trade when the conditions are met. When I have odds favorable momentum on the 13.2, when I have no termination conditions on the 13.2, and when I have an area for entry inside of my favorable large triggers. Guys, this is the conditions that must be met without question in order for me to take a trade, period. After I define my entry, I need pictures. I'm going to put pictures of that perfect long into my plan so that it's a one-click stop. Guys, I've been building my perfect entry plan on my spreadsheet since I started trading. I'm going to put a couple in there so I know exactly what it looks like. Let's see. It looks just like strong triggers, no termination conditions, and a pullback to an area of resistance inside a favorable large trigger. So guys, this is the first step. Define your entry. Create your own checklist for it. Take pictures of your entries. That perfect entry. And guys, if there's any conditions that must be met as you work your way into a medium probability trade, this example plan has the assumption that you'll take 50-50 trades. Well, I put something in there on a 50-50 trade, no divergence will be present. On the 5-1. So I have to commit to that, right? This is my plan. This is my plan of attack. I have to commit to that. And if I don't commit to it, I need someone to hold me accountable if I'm not holding myself accountable. That's what posting in the room is. You may put in your plan that the small triggers must be outside of the large for entry on the 5-1. You may say, I want odds favorable momentum on every chart because I want the highest chance of success, even if it means I have to sit on my hands and wait a little bit longer. You guys with me so far? Write a plan. Put pencil to paper and start the process of writing this plan. Because guys, this is a big deal. And then when you've defined your entries, and guys, it's going to take you a little time to get those best of the best entries, isn't it? Of course it is. It took you 4 years to get your bachelor's, or maybe some of you it took 7 years. Once you define your best of the best entry, guys, you're going to define your management plan. Again, this is an example of how you can write your plan. I will trade 2 contracts. I'm clearly defining my management plan. My initial stop will be 12 ticks. That's what I'm going to put into my ATM strategy in NinjaTrader. It will be adjusted below or above the window of opportunity initially, where the market shouldn't go, which means that it's going to start at 12, but I'll move it accordingly, up or down, outside of that window of opportunity. I'll take profits on my first contract at $100, and then I will move my stop to break even manually. My second target will be $200. Guys, this means that for any entry I take in the first 30 days on a high probability trend trade, my goal is $300 total. 200 on the second, 100 on the first. The odds are favorable that I'm going to take a lot of trades that are $100 and break even. And that's okay. Because the first 30 days isn't about becoming great at management. It's about becoming great at entering the market where it's likely to continue. Every time I take the perfect entry, it's going to create an opportunity for me to analyze the charts to go through and determine if I could have held for a bigger move. Here's one from my management section. When my large chart has odds favorable momentum and says we're going to the next area, I'm going to hold that second contract to the next area. This is how management plans are built. In the beginning, keep it mechanical, keep it methodical. Where did that one go? Awesome, John. I will trade 2 contracts, mechanical. My initial stop will be 12 ticks, mechanical. It'll be above or below the window of opportunity. Guys, there's no opinion here. It's 100%. It won't be moved until there's a reversal bar in the direction of my trade. No opinions, no hope, no fear, no anxiety, just a very clear-cut plan where I take my profits, where I move my stop. Everything is defined for me. That's your first 30 days, guys. You're going to build a plan. Let me figure out. There it is. This is the trade that I waited 2 hours for this morning. Odds favorable, fits the checklist. No termination, fits the checklist. Area for entry, fits the checklist. Is it coming from a good top or bottom? 100% checklist. Do you guys see it? That's it, right? That's everything that I'm looking for. I'm going to give myself a number 1. I take my entry. My stop is outside of the window of opportunity. It starts at 12 ticks. I get a reversal bar. My stop is below the reversal bar. At $100, I take profits and I go break even. At $200, I'm out of that trade. Whoops, what was that? That was $300, guys. 100% rules-based, 100% mechanical on the management plan. Now let's look at what we have here. Everything's still set up. Smalls were outside of the large. Everything's set up. Could I have held for a longer move? Probably. I can put that in my management. Guys, are you with me? Write a plan. I'm going to put this plan in class too. Guys, here's the best part. You're not doing this alone. You have a pretty good support crew, don't you? You've got your salesman, you've got me, you've got tech. Guys, there's that example plan. There's my email. Write yours out. Notice that mine takes 1 sheet of paper. Write yours out. Email it to me. Hey, Mark, I need help with this. Hey, Mark, does this look like a great way to start? Mark, am I missing anything? Guys, I'll respond. We'll talk about it. Let's get you where you want to be. Write a plan. Commit to the plan. Hold yourself accountable. Send me your plan so I can hold you accountable. Shane, let's see what you did. You said you had a breakthrough. Price reaches resistance. Your trigger lines haven't gone through. You still don't have a mid-band. You don't have a mid-band either. Oh, this is John's. John still don't have a mid-band. Pretty cool, right? This one went without you. It happens. There's no area inside of favorable large triggers here. Your triggers are split. Resistance has the potential to hold. I love that you didn't take this trade, John. I still wish you had a mid-band, though, because you're missing indicators. Let's see. If I go to indicators, mid-band display, you should have them in there. Hey, John, put a message in with Jason and Tech. Let's get you so that you have all of your areas so that you can stick to your rules. It'll help. What are we recognizing on the ES right now, guys? Area of resistance, absolutely no trigger lines have broken through. Termination condition, right? Is this your long trade? You've given away the advantage of momentum. You've given away the advantage of a clear path. So if this market rockets all the way up to 40.82, does it mean that your rules are wrong? Or does it mean that you're not willing to put your money on a trade that doesn't give you the best chance of success? Guys, it's hard. It is difficult to watch the market go without you. And you have to develop that trust in the rules. You have to put yourself in a position where you absolutely believe. Shane, I'm a tick, maybe. Remember that they're areas, and that's such a key point. You may miss it by a tick and then finish the move. What you will find is that this stuff is crazy good. So if I'm looking for a short, and this divergence line wasn't there, I love the amount of room that I have down to get to that key area. One tick off may be enough for me. 3, 4, 5 ticks. If the conditions are perfect, I'll take a shot because they are areas. But look at that. That's 1 or 2 ticks. That's a little bit of overrun. That is to the tick. That's about 5 ticks above. A little bit of overrun. Absolutely to the tick. Few ticks below, few ticks below, 1 tick below. So they're areas. Absolutely to the tick, to the tick. And that's where the rest of your indicators help out. This one missed it by 2 ticks. But your sellers decided after the 2 ticks, they're like, you know what, close enough. Let's take profits. And there it goes. So it's, I like to take a look. Guys, here's that 50-50. Not even, not quite. Nothing to do there. Did that answer your question, Shane? And look, there it is. That's the one that's going to try and get you to break your rules next time. That's the one that's going to, well, it worked last time. It worked this time. Let's try it next time. Guys, we made it through an hour pretty quick. Nice job. I'm going to take a few minutes again. I'm going to go reload my water. I want you to think about what you want to talk about for the last hour, guys. I'm a big fan of you guys kind of being the driving force behind what we're going to do for that last hour. If you want to talk about termination conditions, Gary, if you want to talk about the HVA trade a little bit, if you guys want to see it, whatever you want to talk about, let me know. Take a picture, ask a question, raise a hand. I'll be back in a few, and we're going to finish this one strong, guys. All right, guys, here we go. Last hour. So there's that second termination condition, right? If these termination conditions are really going to reverse the market, if they're really going to create a good top, a strong top, trigger lines are going to roll. Large are going to go from green to red on every chart. So a little bit of patience sometimes goes a long way. Crude oil bouncing around, doing its thing. 50-50 trade, right? Let's go back and find, let's do a little bar by bar. What do you say? $10.19. I'm going to find a good example. I'm not sure crude's been given the best examples today. Yep. All right, guys. Y'all with me? Here we go. 13.2. Tail into momentum, right? But we still have odds favorable. Give me a Y in the room if you see it. Rule number 1 has been met. And I have no termination conditions. My smalls and my large have broken through this area of resistance. I have the advantage of momentum and I have the advantage of a clear path. You guys with me? This is what your market's going to look like. Pretty cool, right? This is when I look over here and I say, well, let's start figuring it out. What areas do I have? Well, I've got support, and I've got a mid band here, and I've got support down here. So I'm just kind of saying to myself, all right, it's time to take a trade. Rules 1 and 2 are met. What am I waiting for on my 5-1 chart? What do I need to see? Do you guys remember? What's going to signal the beginning of that pullback? Anybody? A down bar, right? All of these up bars, we're looking for a down bar, for that reversal bar. There it is. So here's my reversal bar. Let's identify what's my window of opportunity. It's kind of a big one right now at that first down bar. From the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. You guys with me so far? I've got odds favorable momentum, right? What do the rules tell me? That I need to right click and I need to activate a limit order right at the top of that window. This is where I feel good about what I'm doing because look at this, guys. The top of my window also lines up with support on my 13.2. That's kind of a nice thing. So here's my limit order. Market's coming down. I'm getting excited. Oh, I think I'm going to be in a trade. Market's coming down. Oh, here it comes. Here it comes. Oh, no. Guys, it didn't fill us, did it? What should I do? Should I say, well, that was close enough and hop in right here at 82.21? What would you do? I can tell you a lot of people are long at 82.21, right? Let it go and be angry? All right. Guys, I took this trade this morning. Oh, look at that. So right now, if you jumped in at 82.21, you're in full pucker mode, aren't you? You're like, oh my gosh, I'm already down 90 bucks a contract. There we go. We're filled. And guys, there's my entry from this morning. And believe me, I've chased that one before enough to know that my money comes from 82.10. All right, so we're in this trade. There's our entry, 2 contracts, right? My initial stop. We'll use this one for my initial stop. 82.10. I think I started about 12 ticks. So here's my initial risk outside of the window of opportunity. Here's my entry at the top of the window. Do you guys, so far so good, right? All we're doing, guys, is working on entries. Let's see what happens. Uh-oh. Oh boy. Oh no. Should I move my stop, guys? What if I lose money? What do you think? It's all right. Man, this just keeps getting worse. I'm down $40 a contract right now. Uh-oh, there's 50 a contract. It just keeps going. Up, there we go. Whew. Guys, I had the advantage of momentum. I had the advantage of no termination conditions. And I had the advantage of taking my trade from an area inside of favorable large triggers. I have every advantage I need to let me know that this is a trade that wins 70 to 80% of the time. So guys, I had every advantage, and now I have the trust in the methodology. Elvis, this is from this morning. All right, so my rules say my initial stop will be 2 ticks below the reversal bar in the direction of my trade. Mechanical, right? I have no opinion, guys. All I can do is follow my plan. Oh. There you go. Better? Sorry, it was still live. My plan says that I will trade 2 contracts. My initial stop will be 12 ticks. Hey, 10KM, good morning. It'll be adjusted above or below the window of opportunity. So far, so good, right, guys? Move 2 ticks below the reversal bar in the direction of my trade. Am I being very mechanical so far? 100% following the plan? There's no room for emotion. Guys, I'm an emotional wreck. I don't want to have fear and greed under this. I want it to be mechanical. I'm in. My stop's in place. If I'm in at 10, my first target is at 20. You ready? My second target is where? 30? So there's my targets. This is my stop. We'll make this one red just for this trade, or salmon. There you go. There's my stop. There's my targets. I'm in the trade, right? I took some heat, but I'm okay. Oh man, there's a down bar, guys. This is so scary. Have you guys watched the ticks before and think, I'm up, I'm down, I'm up, I'm down. Oh no, what do I do? Do I get out? Do I stay in? Guys, this is where a very mechanical approach. This is where I remind myself that I have the advantage of momentum, that I have the advantage of no termination conditions, that I have the advantage of entering a trade from an area inside of favorable large triggers where it's likely to continue. That's it, 10 km. Roll that chair 6 feet back from your desk. Guys, when I started, I would do this and this. I'd be like, oh, hold it. If I give it more room to run, it'll go, right? Let me make it bigger. Nope, let me make it smaller. Oh, no. Anyone else ever done that? Palms start sweating, right? You're like, oh, man. I don't do that anymore because I believe in the advantages, guys. I believe in the advantage of momentum. I believe in the advantage of no termination conditions. And I believe in the advantage of taking this trade from the area where the market is likely to continue. I've studied. I've taken my pictures. I've posted in class. I've asked my questions. I've built that trust. Let's see what happens. Oh, whew. All right. There's one, right? We're good. Stops kept us safe. Oh, I feel better. What do you think? First target reached, guys. Congratulations. There's $100 in your account that nobody can take from you. Target reached. My rules say when my target is reached, I go to a zero loss level. I'm break even. So guys, there's only one of two things that can happen at this point in my trade if I'm a brand new user. I can either insert my emotional side and move my stop and go, oh, I don't want to give any back. I'm going to tighten my stop way up. Or I can stay mechanical as I develop a management plan. So I'm going to stay break even, guys. I'm going to follow my plan because I wrote my plan. I sent it to Mark. He knows what I'm doing. He'll probably yell. There it goes. There's that first target hit. Market's coming up. Oh, anyone else watch the ticks? If I would have tried to make sure I didn't lose, guys, I'm out of that trade. That's why I keep it mechanical. There's my second target. We just walked through a high probability trend trade. From the advantages on the 13.2 to the entry on the 5.1 to the emotional roller coaster that is a trade for brand new users. There's $300 in my account. I waited for 2 hours for this trade to come to play, guys. 2 hours. But I committed at the beginning of this week, on Tuesday, my first trading day this week, I committed to following my plan 100%. So Kevin, the first target, my first contract, see how it took one off at 82.20? I'm long two. One contract goes off at $100. One contract goes off at $200. Does that make sense? So right before, if I took both off at 10 ticks, it would be a $200 trade. My ATM strategy looks just like that. Stop loss initially is at 12. First profit target on my first contract is 10. On my second is 20. There you go. I'll put that in the room for you, just in case you want it. But I committed to trading that strategy, that high probability trend trade checklist, that mechanical approach. That's the same trade that we just walked through, guys. That's the picture that I took this morning. That was it. So this is all that I've done this week. And guys, if you ever have charts that aren't current, that you can't see everything, click the white arrow. It'll bring you all the way to the front. Click the capital F. It'll get you where you can see what's happening. So this is where the experiment's going so far, guys. So far this week, I've taken 14 trades, 7 trades, 2 lots each. I'm at 85% winners. I'm up $1,100. What does that mean? That means that break-even's been caught a few times, right? I've had quite a few of those $100 trades. My average win to loss is only 1 to 1. But I'm winning 86% right now. Guys, it's going to adjust. So Elvis, that's only pre-market, right? That's a 2 lot. That's a 4 lot. That's a 10 lot. Taking the best of the best trades, right? Would anybody be upset being up 11 grand before open on Thursday? So it's not a matter of more trades. Sometimes it's a matter of better trades, committing to the best of the best. So that's what I'm doing, guys. I'm committed to it this week, and I can tell you that I've sat on my hands and skipped an awful lot of trades that I would normally take for the sake of this experiment. 10 km, let's see what you did. How do I read these terminations? My read was to go short at 39.91 at 13.44 time, but did not because of the 1-to-1 in support. And small triggers did not go below support. What will John do here? 10 km. Are you ready for my answer on what would John do there? I want you to brace yourself. Couldn't care less what John would do there. Pardon my French. Don't give a shit. Because John's plan isn't my plan. If I try to trade like John Novak, who has 27 years experience, oh my gosh. You know how I read this termination condition? It's a termination condition. What do your rules say about trading into a termination condition? Mine say don't. Mine say if price reaches an area of resistance and none of the trigger lines go through, don't trade in the direction until it breaks. That's how I read that one. Same thing here. That's a termination condition. And then let me give you the other side of that one, 10 km. What is this? This is a 13.2. Here we go. Take care, Bobby. So there's John's 34.5 chart. There's John's 21.3 chart. Okay? So John says if we were going down, right? If he has odds favorable momentum and no termination conditions to the downside on a 34.5, and he has odds favorable momentum and no termination conditions on a 21.3, he will identify this area on a 13.2 as a point for a continuation trade, and then he will typically look for a pivot stop out on a 5.1 to enter. That's what John Novak would do. How do I know that? Because John Novak has a plan that's been clearly defined. Guys, remember when I told you write a plan? There's a link to his. Pretty cool, right? So 10 km, he has to have a good top or bottom. He has to have very strong triggers. He's looking for the 13.2 midband. And he's got examples for you there as well. So, yeah. But the reality is you can't trade like John trades. Trade like you trade. If you have the same trade, that's great. But what I found, and we had this talk over the weekend, if I try to do what John Novak does, that typically separates me from my money because I don't link everything as well as he does. I don't have the experience. I don't have the repetitions. So I stick to what tends to be a little more simple approach, something that works for me. I love taking pictures of it. I love asking him questions about it. I love showing him my pictures and getting feedback. But 10 km, take this exact same scenario, look at a 21.3 chart, look at a 34.5 chart, and determine if this fib was likely to hold. If this fib was likely to hold, and then look to see if there were entries for it. Does that make sense a little bit? I can't look at 5 charts. My brain cramps up. I can't do it. I've tried. I lose every time I do. I'm not there yet. I'm okay missing the bigger moves because I'll just trade more contracts on the ones that work for me, that fit my plan. Absolutely. And when he gets back, when everything settles down, and he's back in the room, he'll talk to you all day about those and get you lined up on it. I understand the concepts. And there it is right there. There's that 21.3. Strong triggers, pulls right back, probably supported by the 34.5 as well. And you got stopped out. That's the part, if you're going to do the bigger moves, you've got to keep stops in place. You've got to be willing to lose more to win more. That's one of the things that he told me. Show me the 5-1. Did you post a picture of the 5-1? Let's look at it. Can you do that for me? Because I can help, without a doubt. I think these are great questions, guys. And I think that this is amazing because it reminds you that there's more to do with the software than just a high probability trend trade. Luciano, strong triggers, no termination conditions, small window of opportunity, didn't work. It's that cost of doing business, Luciano. I love that you'll post this one, though. I love that you'll post it because, guys, this reminds us that anything that wins 70 to 80% of the time has to lose 20 to 30%, right? Luciano, picture perfect, rules met. If I wasn't teaching this class, I would have taken that loser with you. My rules say that I have to enter that trade because of all the advantages that are present. Good segue for this one, guys. I have zero control over the market. This is my favorite analogy. There's two types of people in the market. There's sharks and remoras. Sharks, they're the big money investment, institutional traders, thousands and thousands of contracts. Guys, these are the guys that create tops, that create bottoms. These are the guys that establish momentum. I'm a remora. I wait for these guys to create a good top or bottom. I wait for these guys to give me odds favorable momentum, and then I try to take the scraps of what they're doing. Luciano, right here at 406,650, a shark said, I want that market to go up. And even though you had every advantage, you had zero control. he got exactly what he wanted because he had the money to make it happen. The sooner you realize that you're not in control of what the market does, the only thing that you can do is trade a plan that provides an edge, that wins more than it loses. It takes a lot of the stress out of trading, guys. Which is why when we did that little bar by bar and it turned against me, it doesn't worry me because I know the advantages that I have in place and I know that it's a methodology that wins more than it loses. So I take that trade every time. I'm obligated to. I made a commitment to myself through the writing of a plan. Same as yours. It works, doesn't it? How's it working for you, Luciano? What's your win percentage look like? Can I ask? You don't have to share. That's not anything that you have to share in class. It's important that I let you know that. 70%. Kevin, on his missed trade, where would be an ideal entry? I don't know. Area of resistance inside of favorable large triggers? Kevin, what does your plan say about 50-50 trades? Where the smalls have broken but the large have not? Do you have a rule about divergence? If you don't, resistance inside of favorable large triggers. If you do, it's not your trade. Pretty cool, right? Entry was just on the 21 because of all the trigs above, 75% strong. All right, Kevin, so let's talk rule number 3, right? Rule number 3 says that I will buy or sell a pullback at an area inside of favorable large triggers. So if I make my window of opportunity, I've got one area inside of favorable large triggers, right? That's it, just one. Do you see it? So you're absolutely right. A tick or two below that area, which puts you right in between the mid-band and the one-to-ones. Picture perfect, Kevin. Great job. So if you're okay with this divergence, that's your entry. There it goes. Good stuff. Brenda, let me take a look at yours. So on your 5-1, all right, I see. So let me help you a little bit on this one, what John does. And it's a patience piece. This is the area likely to hold, and you've identified it, right? But everything is still down strong on this smaller chart on the 5-1. Couple ways to handle this one. Let the triggers roll. Let those large triggers go from red to green. Or the other one that John will look for is he'll take a pivot stop out. When the small triggers start working up towards into it, and you get this pivot stop out right at the area likely to hold, it's not quite the same entry as you, but that pivot stop out at the key area is a great indication. Yeah, for sure. It's a tough trade, right? Because the part that people don't remember is that you're trading based on a huge chart. Your entry is right here. Was there any reason, if you're expecting this area to hold? It's hard. Just break even, right? But it's break even because of what's happening on a 5-1, not because what's happening on a 21. And I think that's where my brain disconnects a little bit. You have to sit through a lot of nonsense. Yeah, but if you let it slow down on the 5-1 a little bit, then it gives you that opportunity to kind of avoid the nonsense, that fight. Let's see if we can find an example. We'll look at the top here at 83.34. What time was that top? 10:15? Is that right? That's right. So here's the area that you anticipate to hold. Everything says up, right? It's tough to jump in there. Well, this isn't the best example, but if you let the triggers roll, you can take advantage of that one. That maybe wasn't the best example. Let me go to the picture that I took earlier today. If I'm anticipating this area to be the area to hold, I think this is a much better picture. The first shot is very aggressive, right? You're fighting those strong triggers. But if I let the small triggers change direction, the large triggers are up, maybe your 8 range gave you an indication that it should hold. There's a potential little stab back, a continuation style trade at 66. It's a 7-tick difference, right? But now you feel like, all right, I let that momentum die on my smaller chart. Maybe I jump in at 66. Here's my next picture. It's stabbed right to 66 and headed up and finished the move to the next area. Does that help a little bit? And this is more advanced, isn't it? You're anticipating this area to hold, but why not let that smaller chart kind of confirm it? Let me go to my library because I took one yesterday, kind of the same thing. I take so many pictures, guys. Oops, I don't think that was it. There was a picture as well where there was a top in place. And rather than jumping in at the top, letting everything roll and looking for a pivot stop out at that top creates a better scenario. So I don't know. If I find that picture, I'll bring it tomorrow. But sometimes it's just a matter of letting it slow down a little bit. 100% of the time you don't follow the rules, you get stopped out. That tends to work about the same for me. Every time I break my rules, I lose. I had this talk with John. And guys, I may have like a 3-week run where I'm doing amazing following my rules, and then I get smarter than my rules, and I lose. And when I lose, I get mad because I'm accustomed to winning. So I take the wrong trade 4 times. Anyone ever done that? Revenge trading? Look at this one. Smalls breaking below, larger coming down, 50-50 at a key area. No divergence potential. Can you identify the bottom of the window? You guys see what I just did there? Smalls below the large, larger wide. I still need a reversal bar, but haven't I already identified where the market's likely to continue in the event I get a pullback? Yeah, Gary, we all do it. But why do we do it? You know what one of the biggest reasons is, especially you simulator traders? Is you practice the wrong trades. You get bored and you practice the wrong trades. You get simulator balls or ovaries if you're one of my lady traders. Pardon. You get brave because who cares, right? I'll fight the trend. I'm on simulator. I'll fight the triggers. I'm on simulator. I'll jump in early. I'll hold too long because I'm on simulator. Guys, this is your path to becoming a confident trader ASAP. Post your trades in class, right? Add more to break even. Yep, we all do it, guys. Congratulations, you're human. Post your trades in class. Somebody told me today they were in a slump, but they've only showed me 2 pictures. 2 pictures, and they're in a slump. Why wouldn't you? Guys, if Tiger Woods is sitting on the bench going, hey, Mark, let me help you with your swing. Holy crap, I'm all over that, right? Post your trades in class, track your real-time performance. That's all right, no worries. You did it on MES, blew out your account. At least it was MES. But guys, look at this. Learn the rules. There they are. Right there in your plan, plain as day. Simulate your trades daily. Post pictures in class until you're sure you have the correct rules. You cannot practice the wrong trades. All right, ready? Moment of honesty. Who practices the wrong trades on simulator and market replay? Who takes revenge trades? Who takes stupid trades hoping that they erase breaking the rules? Guys, I'll be the first one to say it. I've done it. I do. Someone told me once, he's related to me. He said eventually you'll hate losing so much that you'll follow rules. Let that sink in. Eventually you'll hate losing so much that you'll follow rules. Everybody gets there at a different point, guys. Everybody goes through exactly what you're going through. Simplify your plan. I'm going to bring Ron up one more time today. Ron, I swear this is the last one. Ron has posted 50 trades in this classroom over the last couple weeks. Ron has 50 trades that look exactly the same. 50 trades that if you put them up to a checklist, would meet the checklist every time. You're welcome. It's just because I've been there. Guys, I've made every mistake that you guys can make. I've lost money. I've been aggressive. I've fought everything. I've done it. It's one of the reasons why I love teaching this class. And one of the reasons why you guys don't realize this, but when class is over, I just call my wife. I'm like, why won't they follow rules? And she's like, why do you break rules sometimes? I'm like, this isn't about me. We're talking about them. Go do market replay, guys. Fix your mistakes, right? Fix your mistakes. Take the pictures of the correct trades. Repeat the process every day until you always take the correct trades. Guys, write that down. Not until you always win, right? Until you always take the correct trades. So 10KM, if you're still making stupid mistakes, and forgive me here, if you've been doing this in 2005 or 2006, I'm going to give you the same spiel that I give everybody that's too smart for the damn checklist. Do you think you could do 5 days where you click yes on everything? Not even on everything. Do you think you could do 5 days where you click yes on these 3? Could you do it? Could you do 5 days where it looks like this plan? Why wouldn't you? You want to make money, right? So guys, and I do too. Don't think I'm calling anybody out here. If I know through my study, through doing it right, that I can win more than I lose, doesn't it make sense if I'm in this to make money that I simplify it to the bare bones and get so good at making money with the highest possibility trade and do that before I begin to add more complicated trades, before I begin to add medium probability trades, before I begin to chase high volume area trades, counter trend trades, areas likely to hold trades, edge trades. That's it. So 10KM, if you took a loss If you took a loss and it followed this checklist perfectly, you take a loss with odds favorable momentum, you take a loss with no termination conditions, you take a loss by taking the absolute best, highest probability entry, I can tell you from experience that loss doesn't hurt. You don't care. You care. Everybody cares about losing, but you say to yourself, just like we did when we did that bar by bar, I have every advantage in a proven methodology that wins more than it loses. I have to lose trades. If I take 100 trades, I have to be mentally and financially prepared to lose 30 of them, and I get zero say in when those 30 happen. Does that make sense? To everybody that's been a trader. Guys, the mechanics are easy. The mental side is where you have to excel. Believe in it, trust it, practice it. Only practice the best of the best. And if your rules are met, take the trade. It never came back, did it? So now you have to look at that and say, man, look at all that money I didn't make, all that money that wasn't mine. And you have to learn to be okay with that. There's a pivot stop out at resistance. My triggers are still up, right? Got multiple divergences. Let's play if then, guys. Let's play the patience game. What has to happen to go short? In order to go short, I need odds favorable momentum. I don't have it. Please do. Share them. Guys, use me. I'm here for you guys. If you guys stop using me, I don't have a job. I'm just going to say it. You're going to miss me. So take those pictures. Post them in class. The people that post the most get to where they want to be. Guys, Gary's built a checklist, right? Good top or bottom. Termination conditions, odds favorable. He's asking himself, do I have odds favorable or do I have anything can happen here? Does he have an area? Does he have odds favorable? Gary, this is the one that you're working on right now. You added it to the checklist, and now you're going to have to go through the repetitions to believe it, right? No divergence. Or wait for the market flow signal. But these are the same thing with two different options, aren't they? So Gary, you say 50-50 trades with divergence. Okay, if no divergence, that should say 50-50 trades no divergence on the 5-1, enter the trade. 50-50 with divergence, use market flow signal. See, here's a plan, here's a checklist. I found a little problem there. If there's no divergence, enter the trade, right? Don't complicate it. 50-50, no divergence, get in at the area. 50-50 with divergence, either no trade or use a market flow signal. HVA, Gary. Your HVA, the one that gets you, is the trigger lines. You're not letting the trigger lines get to the correct side. I've seen a couple of yours. You're just trying to be first. Here we go, guys. Pivot stop out at resistance. Smalls below the large, larger wide. 50-50. Order pending. 50-50 on a divergence low. If divergence prints, I'm going to cancel that order because my plan says no 50-50s if divergence prints. If divergence doesn't print, doing this live, guys, this is how long it takes. If divergence doesn't print, there's my window. Well, there we go. Divergence printed. Takes me out of the running. Gary's waiting for a market flow signal at the potential area. Let's see if he gets it. Are you guys with me on what we're looking at? And if he gets a market flow signal, he can either go mechanical or he can look for it to reach the next area. No market flow signal yet. No market flow signal yet. We're going to walk through this whole one, guys. This one doesn't fit my plan because of divergence. Gary is waiting for market flow to give either a yellow reversal bar, a magenta arrow down, or an antenna bar in the direction of the trade. He knows that it's a medium probability trade. And because it's a medium probability trade, he'll manage it assertively. He'll identify his first trouble spot, which would be a divergence low. There's his signal. Probably in around 73. 71 is his first target. 69 is his second, if he's trading mechanical. Has odds favorable momentum. There's his first target, right? Stops break even now if he's going mechanical. $100 in the bank. Break even stop. 69 is the next target. If he's not doing a mechanical, there's his first problem. What does the second divergence mean for him? Well, he's probably out if he went break even. Isn't that pretty cool, guys? Just walking through it. Doesn't fit my plan. It might fit yours. Medium probability trades must be managed assertively. I love this stuff. Kevin, I think you asked about the magenta midband. That was your area of resistance inside of favorable large triggers. Two divergences typically will take out this pivot. There it is. See how that works though? If you take the first shot at a 50-50, it's your best shot. And it gives you an opportunity to manage out. Your smaller chart gives you an opportunity. Had you entered at the midband and got in at 74, 73, 75, you probably still made $100 and went break even. Two divergences on a 50-50, look how it pushes higher. Not a high probability trend trade. It's a medium probability trend trade. Based on this trigger, look at that. There's that pivot stop out from a second divergence, but there's no more trades. The rules aren't met, guys. 10 km, one shot, right? One shot at a medium probability. If it doesn't work, stuck like Chuck, sit on your hands. But if you made $100 on that one, you probably feel pretty good. A lot of times when this HVA line prints, that's your spot for the next pop up, maybe to 76. Or maybe all that momentum will push it to the next area. I don't care. My rules aren't met. That's kind of a cool way to end the day, guys. I love it. It's just chart reading. You will get to the point to where you can read your charts like this. You'll get to the point where if you begin vocalizing everything that you see and you take a picture and you start annotating, this is what I see, this is what I see, this is where that happened, this was my red flag. The expectation for this was to take out that. It sure enough did it. Do I keep going? Take that picture, put it in your spreadsheet, keep things moving in the right direction. Take the best of the best, guys. Get those reps. Get the memory of success. All right, that's it for me today. Great class today, great participation. Really appreciate you newer guys hanging out. There we go, 50-50 with divergence. Gary, did that go down about the way we talked through it? Take care.